that issue of demographics is the key driver, that the key thing we need to understand for all markets, particularly here in the UK, but also Japan, where you're also seeing bond yields starting to rise in the long term, which is the market requiring a higher risk premium for some of the volatility, uncertainty we've got due to politics and these demographic issues.
Hello, ladies and gentlemen, and welcome to this week's Tea Break, alongside my co-host Yuri. Joining us today is Gary Paulin, Chief Investment Strategist International at Northern Trust Asset Management. Gary, thank you so much for joining us on the show. And to kickstart our discussion, I've heard you've gone for the coffee.
Yes, I'm being slightly contrarian, forgive me. Gone for the flat white, which was invented in New Zealand, my home country.
Fantastic. Yuri?
I've gone for the black tea with sugar, Ali, because probably the preferred drink of choice in your Middle Eastern
Very
home
much
region.
so, yeah.
And that's where so much of the news focuses at the moment. The news focus, but the market focus is already shifting away from there to this renewed trade war with the US and China. What are your thoughts on China as an investable market?
There is change occurring in China, a lot of change that's been missed by a lot of Western analysts. And that change, I think, can be summed up where China was once considered a country that was export dependent, fueled by debt, and the wealth transmission was led by property. It's now pivoting to a country that is more focused on internal consumption. It's being fueled by equity, and you're seeing stock markets being the primary mechanism for wealth transition. And I just don't think the Western analytical communities really picked up on that change, which seems to be occurring at the moment.
There have been some interesting events in Paris, and as we know, what happens in Paris quite often has reverberations in the rest of the world if we look at history.
I mean, who'd have thought that the next French Prime Minister would be the guy who resigned not long ago? An unbelievable turn of events. We carried an opinion piece, Gary, by Michael Nizard from Edmund de Rothschild, looking at how private portfolios might be reshaped by various Parisian permutations. Is this also an area of interest, Gary?
What's happening in Paris and in France is symptomatic of what's happening in lots of other markets. And I think they share similar drivers, and those drivers are, for example, political fragmentation, but particularly, and I think critically, demographics. Right? French pensioners have just seen off, as you said, they're the fourth Prime Minister in 9 months. That issue of demographics is the key driver, that the key thing we need to understand for all markets, particularly here in the UK, but also Japan, where you're also seeing bond yields starting to rise in the long term, which is the market requiring a higher risk premium for some of the volatility, uncertainty we've got due to politics and these demographic issues.
And obviously in Europe, Gary and Ali, Ukraine has been a very major issue, but some of the countries next door to Ukraine, Romania, Poland, they've been kind of less fashionable investment areas, but there have been some quite interesting stories there, Ali.
Yeah, I spoke to a few European wealth managers, including Quintet and Deutsche Bank, and they're particularly positive about Eastern Europe, drawing attention to the decarbonisation initiatives. Are these on your radar, Gary?
Where we have a lot of client interest, and indeed where we are allocating our own capital, is our own client capital, is to the broader emerging markets generally. That certainly attracted more attention, China being a big part of that. But the one region that is now, I think, interesting and where we need to give more attention is the Middle East. Because unlike what we're seeing in France, Japan, and the UK, their demographic profile is the inverse. And so you don't have the dependency on the state where your worker to retirement ratio is falling at the rate that is elsewhere, which means less debt, less taxes, and it becomes a more attractive region for mobile capital and resource.
And one of the major trends across all markets that we've been looking at, and Ali's been looking at in particular, is investing in AI and also about the private markets as well. I mean, those are two major trends. If we start off with the private markets, Gary, is there a danger of any bubble developing here when it comes to buying into illiquid investments? I mean, we saw that happen with the hedge funds back in 2008.
Private equity saw a big surge in interest way back when interest rates were very low and IPO markets are very liquid. That's now less the case, but that might still come again. So I don't think we're in bubble territory. Perhaps I think we were probably more like it, several years ago. But in terms of private markets, I mean, they clearly have a role, but it's very important that you match the capital base, long term and patient, with the right manager, because there's a lot of dispersion. So picking the right manager is critical. But they're here to stay. They have a role to play in certain portfolios, and I think it's a good outcome for a lot of investors that the accessibility is now going to increase. The AI bubble thing is it always sort of gets me here because I've still got scar tissue from the last internet bubble. My first job out of university was selling pets.com, which was emblematic of bursting that bubble. And when it burst, so did my hopes of early retirement. So it hurts. And when I see echoes of what we experienced then now, it starts to these old issues reassert. And the echoes are in things like concentration levels. You've got, circular financing. You've got a bit of leverage, really euphoric valuations in certain areas. But there are differences. And I think it's important that we focus on the differences so that we can be more balanced in our decision making. And the differences for me are, yes, there's concentration, but that's matched by earnings concentration. In fact, there's more earnings concentration relative to total earnings than there are valuation concentration. The market multiples that we're paying for these key technology companies are much lower than what they were back then, and they're better companies and higher quality companies now. What's funding this bull market is not credit or IPO capital, it's cash flow. And we all forget back then we had Y2K, which was very sort of focused, driving activity to a single point, and we had rate rises. And finally, we had time. And we all forget the power of compounding. We only had 5 years for the flywheel to develop. Now we've had 31, 32 years, and I think the impact of that is still yet to be felt.
And Gary, you talked about the scar tissue from the last bubble, and I know that you've got other scar tissue because you're a former rugby player. So you've got it all over the body, I'm afraid. But if you compare playing your favourite sport of rugby to being an asset manager, and I know that you're also sponsoring the rugby in the All Blacks game in the US coming up from your home country as New Zealand, as you mentioned. Is it a scrum down between various ideas, or are you grabbing the loose ball and running down the wing with a particular idea? How does that work when you're thinking about it?
I would take the physical scars of sport over the emotional scars of losing money any day of the week. I can't remember the pain of being hit in a tackle, but I can remember the pain of opportunity cost.
So that's quite a lesson for us, isn't it, Ali? And one to digest when we're having our tea or coffee.
I hope so, and I can't wait for that All Blacks game, and it should be an interesting game coming up. Gary, thank you so much for joining us today.
Absolute pleasure. Thank you very much.
That's all we have time for today. Don't forget we have our annual Global Wealth Management Summit coming up on the 5th of November. We only have a handful of tickets left, so if you are interested, head on over to the PWM website for more information. See you next week.